Hey guys, thank you for tuning in to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, let's just take a quick peek on my Robinhood challenge. I do want to show you guys what I did buy. And also, if you are following this challenge, please make sure you subscribe to my channel. I do post the trades when I make them in my community tab. I'm not sure if you need to be a subscriber, but why the heck not? All right, let's take a peek. All right, so as you guys can see on my tracker, I did buy 20 shares of AEY, ticker symbol AEY. If you've been following my channel for a while now, you know I have been secretly stalking this microcap company. We can look at their financials here in a second, but this is one of the smaller companies. I think they have a lot of potential. They have canceled at the market offerings. So I think this company is aware of the macroeconomic impacts and headwinds we're currently facing in the economy. Um, so yeah, I am tracking realized gains. So it is showing a loss currently here. But let's actually track what the SPY is. One sec. All right, so I've updated a couple things. Number one, I updated the date to reflect today's date, which is beginning week 3 of 2023. That means another $25 is in my Robinhood account, or is going to be on Monday, which is actually a holiday, so it should be there on Tuesday. I did put the SPY performance that is year to date. The SPY is currently at a 4.64%. I am at 0% because I have not realized any gains or losses yet. So I bought the stock at 145 and it is now trading at, one second, $1.51. So if I did sell at $1.51, I would be at a 4.14%. So I would be right up there with the SPY, but I am not going to, and you guys can't see it actually. It's over here. We have this stupid error. 4.14%. We did not realize, so I'm going to delete the 151 that I have here. I did put my price target and sell targets and whole thoughts in my community tab. So again, please consider joining my channel to kind of keep up to date of the pulse for this process. But let's go ahead and look at AEY's fundamentals and financial data points. So first and foremost, let's acknowledge this chart. We have double top here, which is a bearish pattern, and it dropped the stock from 220 to around $1.40. And we can see that it's in this kind of upward pattern. But what I actually see here is a bearish flag where we have the flag pull right here, and then we have the flag going this way. I do anticipate we might see another drop coming soon, which I think would be a buying opportunity. I think we could see the drop coming to around $1.20, $1.20. And you might be asking, why would you buy a stock that's going down? Well, for one, the only thing that I do buy when stuff goes on sale is stocks. I love when stocks go on sale. So when we look at this company down here, we can see, yep, you guys can see it. The company does 96 million in sales a year. They lose 1 million to income. They have plenty of cash, so at a quick ratio of 1. Their current debt is 0.14 and their long-term debt is 0.09. So it looks like they are handling that debt. The earnings per share the past 5 years and the sales the past 5 years is positive. It's hard to find a micro cap, small cap company that has had consistently positive performing metrics. So earnings per share and sales are positive from the past 5 years. I can't talk today. I need coffee. We also see insiders own 36%. Institution ownership or transaction has gone up quite a bit here. Actually, that is new to me, so that is great. Institutions own 3.8%. Also, this is a low float. If someone came and dropped a large transaction on this stock, positive or negative, it could really move it. So again, this company looks good. We have 28.20% gross margins. Again, that's positive. This company is heading in a positive trajectory. So if they release something that's bad that is not going to be a long-term detriment to the stock, I'm going to buy more. So that's why I only bought 20 so far. I would like to buy more at a lower price, but we're going to see what happens. Just going to scroll down here to the bottom. You guys can see that, but let me move my big old head over here. So 2020, they had 50 million in sales. 2021 is 62 million. 2022 slash trailing 12 months, 97 million. You can see they are growing at a clip, a pretty good clip. From 2020 to 2021, that's about 12 million. 2021 to 2022, that's over $30 million. That's huge. They're paying a little bit more for that revenue, but it is still generating positive returns. Let's just take a look at the balance sheet. Again, we want to see assets dwarfing liabilities, and we also want to see some cash. So they have 2.6 million in cash. They could add some salespeople, expand on a marketing department. Total assets 27.31, total liabilities 16.8. Not a huge or not delicious. A huge or advantageous difference there. I like to see assets dwarf liabilities by like 2 to 10. This is not even a 2, but having more assets than liabilities is a great thing. Full-time employees has gone up since 2021. That's good. So this is looking pretty good in my opinion. Long-term debt down here, total debt 4 million. Brought down from 8 million. So again, like I said, they are reducing their debt. This company, just for informational purposes, basically sets up towers, wireless towers, telecommunication, turnkey wireless infrastructure services through the US, wireless carriers, communication towers, national integrators, and original equipment manufacturers. This segment also offers installation and upgradation of technology on cell sites and construction of new small cells for 5G. The telecommunications segment provides central office equipment that includes optical transport, switching, and data center equipment for communication networks. Customer premise equipment such as integrated access devices, channel banks, internet protocol, private branch and exchange phones, and routers, and decommissioning services for surplus and obsolete telecom equipment. The company was formerly known as Addvantage Media Group and then changed its name to Addvantage Technologies Group in 1999. So another thing that I like about this company is, I'm just rambling here, I'm sorry, I'll make it quick. They've been around for a while. So I don't want to say they're groundbreaking and disrupting a industry, but they've been around for a while. I think they have the skills, they have the knowledge of the industry, and I think they are poised to do really well if they continue to execute. So that is why I purchased AEY for the Robinhood Challenge. I'm going to buy more if it goes lower, which it might. But yeah, again, please consider subscribing to this channel to follow this. I am looking at a handful of other stocks that you have seen in my other videos. Just waiting. We're being patient. But if you guys are enjoying this content, please consider subscribing to my channel, hitting the like button, and I'll see you in the next one.